Bam. I think that's it right there. Let's see. Yep. I think that's it. Testing. Is that it, Mark? All right. Hey, guys. So you can't see me, but I'm here. I have two phenomenal guests this morning. One of which is what did I call you one time, Steve? I'm not going to say anything.
You call me your leprechaun today.
Yes, that's true. All right, so let's see if we can adjust these microphones so they can see you on screen some kind of way.
One of your favorite sponsors, I know.
You are the best sponsor. What are you talking about?
Man, there's only one best.
There's only one best because he's my longest sponsor, so he has to be the best. He's been my sponsor for what, 3 years now, I think? Close to. How long I've been on the radio with my own show, Mark? 4 years by myself, and then 7 years, I think, total. It was December before, I don't know. I remember my first show. I was talking about, I was co-hosting on another show, so this is going to be great. Steve, what is your official title? I asked you this yesterday, and it threw my mind.
Well, on the license, it's a mortgage loan originator.
Mortgage loan originator.
Also a marketing consultant, things of...
Loan originator. Okay. Florida Mortgage. I'll just remember FloridaMortgageCenter.com.
The Florida Mortgage Center.
Yeah, I do know that. Oh, before you leave, we need to record another commercial too.
Oh, okay.
All right. You ready? Oh, hold on.
Man, I left my coffee in my truck.
You want to run and grab it?
Can I?
Go ahead.
Yeah.
For you.
Awesome.
The world stops for Steve Verrier. He has supported my community problem-solving projects.
Yeah.
He has, oh my goodness. I can't think of everything I do. Plus I do a lot of festivals. That's the joys of when you sponsor my show. So like the home shows, all the festivals, I always have a booth and I take all my sponsor stuff with me.
Oh, okay.
So they never have to get their own booth.
Right. Yeah, that's great.
Yeah,
that's
and they come. So he would come and hang out at the home show and hand out his stuff and, everywhere I go and everything I do. So it's kind of cool. So I've gotten to know. See?
It's fresh, it's hot, it's good.
All right, you got your coffee. So
I grind my own, too.
Is that your own coffee?
Well, not my own. I mean, I grind it.
You grind it? Oh,
Yeah,
okay.
I buy whole
I love
bean
that cup.
and grind it.
I like that cup too. Okay, so we're gonna do my regular intro going in, and then you have the one song I want, right? Where I need it to be. I don't know. I may come back from the first break on that one, and it is you're the author of Divorce Your Debt, correct?
Divorce your debt.
Okay.
Keep your spouse.
Keep your spouse. That's the name of it.
That's catchy. I like that.
That's what we're trying to do. Try to keep families together. Keep them from breaking up over financial problems.
I know. All right, you ready?
You are now tuned in to Today with Pastor Jay on WNZF News Radio, where we discuss inspiring and informative news. And now here's your host, Pastor Jerlyn Denny.
Good morning. Wake up. It is a great day and a happy morning. I'm just so thankful to be alive and be on this side of the earth, on this side of the dirt. I have two great guests this morning. I cannot believe it. Steve Verrier is on the show. You are on the show.
Good morning, Pastor Jay. It's great to be back. Thanks for having me.
Well, I like to have you as often as I can. I got to say, you are my top sponsor. I got to give a shout out to the FloridaMortgageCenter.com.
Thank you very, very much. We love what you do. I see you out there every day, so I'm here to support you.
Well, you not just support this show and sponsor this show. You have sponsored and supported everything I've done in the community. Thanksgiving, you go with me and give meals, hot cooked meals on Thanksgiving Day to the elderly in the community. I know you do that. Yeah. Also, community problem-solving projects. I'm a problem-solving coach. You've supported that. You were in a robe a couple of years ago for one of my projects.
And always an entertainer, yes.
Always an entertainer, dancing,
events. Yep.
every event that I've done. run, every home show that I go to. Doesn't matter, you are there. So I just want to say thank you from the bottom of my heart. And for those who are thinking about purchasing a home or refinancing, you definitely need to call thefloridamortgagecenter.com. Steve Verrier. He is a mortgage loan originator. Now, my next guest he has my heart. He's my brother. He really and truly is. And that would be attorney Mark Dwyer. He's the guy that can keep you out of jail. And also he's the author of Divorce Your Debt, Keep Your Spouse, he's a new sponsor now, Steve. You have competition.
Excellent.
Which is good. It really isn't any competition. When did you say, Mark, it's not competition?
No, it's not a competition. We just work together to make you more successful.
Well, and I appreciate that. And I'm glad that you're here. And of course, your website is 500bankruptcy.com. So we're talking about this money. This is March, Money Madness Month. A lot of people have been getting into debt. COVID-19 did not help people in their finances. People have lost jobs. They're not sure what they're going to do. And I know, Mark, you've seen a lot of this in the industry here lately. People can't figure out if they should file bankruptcy, if they shouldn't file bankruptcy. What should they do? Stress has been a huge, huge factor in marriages, and people have been divorcing over it.
Well, what they should do is, if the thought has come to their mind that we have some kind of financial stress, you have to start figuring out the solution, because the future is what's most important. There are ways to get free from debt. There's different ways to do it. Some are complete, some are less complete, some are difficult and will keep your scores down longer. Some allow them to be refreshed and rebuilt and resurrected sooner. Bankruptcy, of course, is the most powerful form of debt relief because it's unconditional in respect to that the law provides for debts to be discharged completely and allow people to restart their lives. That's why it's called a fresh start, one of the chapters of bankruptcy. But it's very complex, and people don't understand all the things about it. There's a lot of misinformation out there about the bankruptcy process and the effects of it. And so they really should consult a lawyer and find out if that option is an option that works for them.
Well, and Steve, you're in the mortgage industry and you're running around and people are calling you saying, hey, Steve, I'm ready to buy this house, and you pull their credit. What are some of the surprises when it comes to bankruptcy that you find on the credit report that you wish you wouldn't have to deal with?
Well, the biggest surprise is when a mortgage is inside the bankruptcy and it's not reported correctly on the credit report.
Now, what do you mean by it's inside the bankruptcy, but it's not?
It's one of the debts that's discharged inside of the bankruptcy, because, people are given the option to reaffirm a debt as well through the bankruptcy, whereas so they take it out of the bankruptcy and reaffirm that debt. So, but what we see a lot of times is, credit reports are multiple pages, and we'll see a bankruptcy discharge, but the mortgage payment history will be incomplete on it, or we won't even see the mortgage on the credit report. So a lot of times we'll have to, we won't find that the mortgage was in the bankruptcy until we actually see the paperwork from the borrower. And the biggest complaint that I would have when it comes to having a mortgage inside of the bankruptcy is a lot of times the people don't realize that there's a foreclosure process that's involved around discharging that mortgage debt. And the foreclosure doesn't complete until title is transferred. So a lot of times people think the bankruptcy is discharged, it's done, they walk away from the property, move on, go rent somewhere else, and then 4 years later they're coming to me thinking, okay, I'm over the seasoning time frame for certain agency loans, I can probably qualify again. But then we find that the mortgage was involved inside the bankruptcy, and there are foreclosure seasoning time frames as well. And those haven't been met because the banks will take their time to complete that process and take over ownership of the property.
So, Mark, what happens then? So how do you help and how do you fix that? Because a lot of times people don't understand that. And I know you explained this at the time of bankruptcy.
That's right. I mean, the first thing is you have to make sure you have a clear understanding. When a person's coming to the bankruptcy process, they get a lot of choices. They get a choice if they have a house, let's say, for instance, that is on the verge of foreclosure. One of the chapters of bankruptcy allows them to save that house out of foreclosure. That would be Chapter 13. Where we do a reorganization plan, and it actually allows 5 years to catch up on arrears and bring the mortgage loan back into good standing so they can save their home. But if they've reached a point where they just want to get rid of their home and get rid of the debt that goes with it, they would file under Chapter 7, and that would discharge their obligation to pay that mortgage. In other words, that bank could never collect another penny from this person. However, the bank still does have the right to collect their debt through the sale of that home. That's the foreclosure process that Steve mentioned. Now, here's what a lot of people don't realize about the foreclosure process. Banks, especially like during the last subprime crisis, banks did not want to hold people's properties because they didn't want to, A, pay the property taxes themselves, B, have liability if somebody got injured in the property, C, have to do all the maintenance and upkeep. So a lot of the times they left the debtor, even though the debt was discharged in bankruptcy, and the debtor did not have to pay a dime, they left them in the house, or they left the house just out there if the debtor had already left the house. And the debtor still owned the house legally, but never received a bill, never had to pay another dime, but they still owned the house. They thought that the bank took the house in the foreclosure process, but the bank never did. So what's really important is to just understand what is the end goal. If you want to be free of a property and you're getting rid of it, which is what Steve is referring to as putting it into bankruptcy, then you also have to take the additional step of getting the title transferred over to the lien holder. And that typically is done with what's called a deed in lieu of foreclosure. The deed is transferred over to the bank so they don't have to foreclose on you.
And most people don't know about that.
Right. Most people don't. And another important detail is with the bankruptcy, the subsequent foreclosure judgment that would come from the bank having to take the property back through the courts, that will not show up on that debtor's credit report, because nothing after bankruptcy with respect to that debt gets reported. So they won't have a foreclosure and bankruptcy. They would just have the bankruptcy, and you would never see the foreclosure.
That's just the circumstance that sets one of our loan applications sideways, and then they can't close because we don't find that out in the beginning when we're pre-approving someone.
Okay.
And that, so that's why it's always important to get the paperwork to us as quickly as possible, because the last thing we want to do is not only pre-approve you falsely, but pre-approve you and then you go out and spend all kinds of money on home inspections and things of that nature, and you can't get that back.
Appraisals and things like that, which is, again, why I have to stress, Pastor Jay, the importance of seeing somebody who knows about the process.
I have to stress the importance of calling Attorney Mark Dwyer at 386-986-9987. Not just any bankruptcy attorney. Mark, they need to call you.
That's correct.
That's probably not a bad idea.
Well, I'll say, because Mark knew about it, and how many clients I say with it, my bankruptcy attorney never told me that.
Okay.
We never talked about transferring title over or anything like that. So certainly, I'm glad that you're up to speed on that, Mark. Absolutely.
Well, we do need to take a break. Don't go anywhere. We're going to be talking about money, what you're going to do about it, how to get rid of your debt, and how you can buy a house after. Don't go anywhere. Don't touch that dial. You're listening to Today with Pastor Jay.
Yeah, we are. Trust me, busy in our industry.
Have him come over and get all of the computers at the command center optimized, cleaned up, cleared up, and I will call you after the show's over. Period.
All right, so this is good. Great info. Let me make sure I'm streaming. Am I vibrating? Who's vibrating?
That's me.
That's you? Okay.
Man, that's a strong
Busy,
vibration,
I
man.
know, right?
It felt like it's coming from down there.
I'm like, where is this coming from? Oh, my goodness.
All right.
Steve, what's a good contact number? Because I don't want to give him your cell.
386-866-1112 is my office Google
Gotcha.
Voice line.
Gotcha.
That's a nice, easy to remember number.
It is 866-1112.
And 866, everybody knows that now. It's one of those exchange. 866, that's good.
All right. You ready? Oh, we're talking about that money. How to erase your debt, how to buy a house, how to get away from the predator creditors and still live below your means in the lap of luxury, owning your own home. I have Steve Verrier and Mark Dwyer here on the Today with Pastor Jay show, and that's what we're talking about. We learned a lot before the break. I'm learning. I really and truly am, and I know my listeners and my viewers that are on social media are as well. But Steve, I mean, how quickly would you think credit is restored? Because you're the guy that when people want to buy a house, you pull their credit report and you see the bankruptcy. How quickly, in your opinion, would you think that credit is restored?
Well, I mean, when we see a bankruptcy on the credit report, the first thing we have to do is look at the date of the discharge on the bankruptcy, because every agency, and by agency, I mean, Fannie Mae, Freddie Mac, FHA, VA, USDA. Those are the insuring agencies that insure the loans in case you default, and the lenders can't recoup all of their expenses. The claim is made in FHA or VA or.
Well, I'm glad you mentioned
Fannie Mae
VA,
will do
by
that.
the way, because most people don't know that you are certified in VA loans.
Oh, sure.
A lot of people aren't. They go to these loan originators, mortgage originators, and they don't know anything about VA loans. So you are up to date on that.
Right. And we also have non-agency loans. And prior to the pandemic, the non-agency loans, I mean, we had programs for 1 day out of bankruptcy. But just about 12 months ago, the providers of those programs said, we're stepping back, and they have not brought those products back to the market yet as far as, credit derogatory
So
events.
when you say 1 day out of bankruptcy, what do you mean by that? Really, what it says?
Well, yeah, 1 day out of bankruptcy, we had lenders that would do that, and they'll come back. They will come back
Wow.
eventually. But right now, they're still sitting on the sidelines waiting for the pandemic. I mean, believe me, last year there were many changes in our industry about employment verification, because, employers here today, going tomorrow.
That's true.
We saw that happen. So, they were taking extra steps in underwriting to not only determine your strength as a borrower, but your employer's strength as well. They would, require statements on your verifications of employments from your employers about, how they're handling the pandemic. Things of that nature.
Wow, now that's a change.
Yep, people were getting reduced hours.
Yeah, a lot of businesses have closed because of the pandemic. So I guess if I were a loaner or borrowing money from someone, I would want to know.
No, there were some definite guideline changes. So, so the non-agency lenders that provided those different types of programs, they stepped off to the sidelines. Haven't really come back yet. They've come back with the different alternate income verification programs, like bank statement programs and things of that nature. But as far as credit challenge, credit scores under 580, 1 day out of bankruptcy, those products are still, taken away for the moment. But, we look at the date of the discharge, because your agency programs, they all have different guidelines about the time frame that have, or what we call the seasoning period, that has to transpire between your discharge and when you can apply for and close on a loan. VA is pretty much the shortest with 2 years, FHA 3 years, and Fannie Mae, Freddie Mac would be 4 years on a bankruptcy, 7 years on a foreclosure. There are extenuating circumstance guidelines, of course, that will allow you to get in within that time frame, no less than 12 months, but you have to support with documentation the extenuating guidelines. And we're really talking about not divorce per se, but death, illness, things that can be documented like that, so that caused a serious decrease in the household income. Those types of situations they call extenuating circumstances.
Now, Mark, I know you have people come in your office. They're stressed out, husband and wives, getting ready to divorce each other instead of their debt. And how fulfilling is it for you to sit down and say, hey, okay, the debt's there, but it's not the end of the world. It's not the end of your life, where it's a fresh start.
It's really encouraging for me to be able to let people know that we, the people, recognize the danger of debt stress, not only on relationships, interpersonal relationships, but also on society. In the ancient days, debt used to actually result in people going to jail. And even more ancient days, it used to result in people becoming slaves of the creditor. when the founders of this country put together the Constitution, they recognized how important it was to not have people to be under the perpetual yoke of creditors. And so they embedded in the Constitution the bankruptcy laws of this country, and then, of course, developed them over the next 230 years. Now, most people don't understand the founders put that in, and creditors have been working for 230 years to weaken those laws. But we, the people, have kept those laws intact. And actually, just last year, a new bill was introduced to actually strengthen and make the bankruptcy process more easily attainable. So we obviously recognize it's a good thing for people to get out from under a debt load that they can never realistically repay. More people need to understand that that option is available, and more importantly, to demystify and debunk the myths. As Steve has testified, there are lenders who are willing to lend people to buy cars actually while they're in bankruptcy. I get emails every day from people, hey, if you have a debtor who needs a new car, we'll fund it for them, we'll lend, and also mortgage brokers. The most important thing for people to understand is when looking at being free from debt, getting a fresh start and getting credit healthy is really important, not just for your relationships, but really even for things such as insurance nowadays. Even jobs are checking credit nowadays. So to keep yourself under a cloud of debt in a cycle that you can't escape is going to have longer term effects. And those long term effects, as they accumulate, tend to have effects on the family. I am so glad that I happen to know better, that I've been in this business long enough to see people who have come through the bankruptcy process and who within a couple of years have qualified. As I said, I've had veterans, as Steve said, within 2 years qualified for home loans. Regular people within 4 years qualified for home loans, which had they continued to have a out of whack debt to income ratio and, let's say, late payments racking up, they couldn't be lent to. They couldn't be lent to because it would just show that they can't afford a new big loan like a home loan or a car. So a lot of people have to understand you actually are healthier as time passes after you've had your debts discharged, because all creditors know if you don't owe other people things, people like to pay their debts. Human beings like to pay their debts.
True.
Most people, and I'm going to say 99% of people, want to have the problem of being able to pay their debts. It's just when unfortunate things happen and it throws them now into a cycle, interest rates jack up on these credit cards now to exorbitant, if not criminal, interest rate, which now makes it impossible for them to ever pay that off. And by holding off a fresh start, all they're doing is delaying their opportunity to be able to become fully credit healthy again.
Steve, have you ever pulled a credit report and went, this guy needs to file bankruptcy?
Yes, I have. I would have to say that. But I mean, more importantly, what I see is people saying, oh, my credit's terrible. And then I pull it and it's really not that bad.
Mm-hmm.
You know, and I'm able to tell people, look, we can work with this. I can have you up and running and looking out, going out looking for houses in 90 days. If you just take these, certain steps and things, so people, it's not the end of the world when it comes to financing. I mean, even you said, if you're inside of a bankruptcy, if it's a Chapter 13, you can get a loan. If you're inside of a Chapter 13, have made 12 successful payments, and you get permission from your bankruptcy trustee. So it's really
it's not the kiss of death.
Yeah, and it's not a wall. It's not a wall. We can get past it.
All right. Well, we've got to take another break. Don't go anywhere. Don't touch that dial. You're listening to Today with Pastor Jay.
Even though you haven't filed bankruptcy, you will not qualify for one of those loans. You will not. while
That's a good
after
point. We'll have to make
bankruptcy,
that point when we go back on the air.
yeah,
And
while
if you're making minimum payments, then
if you're maxed out and your credit utilization is 100%, 90%, whatever it is, and you're only able to just essentially keep making minimum payments, your balance is not decreasing. It's just revolving. That's why they call it revolving debt.
That's
Say,
right. If you got equity,
Sears credit
we want to do
card?
consolidations.
look, that Sears credit card, man, you pay minimum payment on that bad boy. 20 years later, you still owe the same amount of
And
money.
that's by the way, that's a good point. So bring that up because that's a good way to lead into get consolidation loans because there are alternatives other than bankruptcy.
So I'll ask about debt consolidation loans. How much time do I have? About 4 minutes. All right. So that's going to be our last question. Maybe
You can
next-
say, are there other ways?
yeah,
other
ways
than
other
bankruptcy?
than bankruptcy. We'll do that. I've got to give a shout out to my my other sponsors, which got to give a shout out to tradecoaches.org. They'll be here next week on the show. Trade Coach is my other sponsor.
What do they do?
Yeah.
I'm not familiar with Trade Coach.
Oh, Trade Coaches? You looking for that perfect play in the stock market?
Oh, okay.
Go to Trade
Have them
Coaches.
have them call Judy.
Have them call Judy?
Have them call Judy, please.
Okay, I will. Tradecoaches.org. So they're all about the stock market. So they're going to be talking about, making money and some things you can do and how to start out and all that other kind of stuff. So,
Make sure I know when that's airing.
okay.
I'll sit down with Judy.
Okay.
She won't listen to me.
All right. Welcome back. Want to give a thank you and a shout out to tradecoaches.org. Listen, if you're looking for that perfect play in the stock market, make sure you go to tradecoaches.org. Look, it's all about that money. You got to make the money. Get the money from the stock market. If you need to go and, refinance your home or whatever, you can call Steve. And look, if you are so stretched out and you got to file bankruptcy, whatever it is, you can call Mark. We got it all going today. But, what are other ways instead of bankruptcy, Steve? What are other options do you have instead of that?
Well, one of the first things that we look at when we're, either doing a refinance or a purchase is we're looking at the total debt that someone has. And specifically, one of the main reasons people, might look to file bankruptcy is that because they have too much debt out there. Now, when they have equity in their home, we might be able to tap into that equity and do what we call a debt consolidation loan. And I've seen certain situations where we've been able to refinance the loan, pay off the existing first mortgage, and say include $50,000 of other debt that they had. And that other debt may have required $1,200, $1,500 in monthly payments, and then they had a $1,200 mortgage payment. Now we refinance it all into one loan, and it's a $1,300 a month payment. And I just tell those people, look, you're used to making, a $2,600 or $2,700 expense on all of that debt. If you make that expense on this mortgage, you'll be debt-free in, 11, 12 years. Completely debt-free.
And let me also say this, if I may. If you can avoid bankruptcy and realistically get yourself into a financially healthy situation, then you should. You always should have that as a last option. But let me tell you a couple of reasons why that's a great idea, because if you did that way that Steve has just mentioned, by using the equity in your home to get it under control, once you've lowered that outlay that's going out because it's now under a controlled loan, you still need to be disciplined enough, though, to pay in extra to that loan so that you're not paying all the interest that's due. With those types of loans, they're amortized over 20, 30 years, whatever it is. So if you pay in a little more with the money that you've saved, you will actually reverse amortize that mortgage and pay less interest over time. So even though you're already paying less interest because it's been consolidated, you can even pay less interest by being financially disciplined. But there's one other point that I just have to point out. If that amount is so much, or if you don't want to necessarily, dog down your mortgage against your home later, your home in a bankruptcy process, your equity up to $175,000 is exempt from creditors. So in other words, creditors don't get to it. So I do have people that they may be in a situation, especially let's say later in life, where they don't have 30, 40 years left, where their equity would be safe and protected for them to use maybe as with a reverse mortgage or something like that later on. They don't have to give that equity to those revolving creditors. If they file bankruptcy, that debt would be discharged and all of their equity in their home would be preserved. So it's just different things. You really should speak with a professional, but there are different ways. And the way that Steve mentioned is a great way. It's a way that's fantastic. You are giving away your equity, but you're getting your debt under control and avoiding having a bankruptcy in your record.
Well, I want to thank you both for being on the show. I've learned a lot. And I mean, I don't know what I'm gonna do now, but I'm gonna do something. I feel like I don't need to file bankruptcy. I don't need to do that yet, but I am going to be purchasing another home here shortly. So I'll be calling you, Steve. And those of you who are interested, make sure you call them at 866-1112, 866-1112, and don't forget to hit markup at 986-9987. Thank you guys for being here. I want to say happy birthday to you again, and happy birthday to your son.
Hey.
Yeah. All right, guys. You know what I say? Yesterday is gone. Tomorrow's not promised. What are you going to do today? Today, you're going to get away from the predator creditors and you're going to buy yourself a new home. God bless you. Have a great day.